Assalamu alaikum, Prof. Assalamualaikum warahmatullah, everyone.
Walaikum assalam warahmatullahi wabarakatuh.
Brother Shakur, only three of us today.
No, they will join us, inshallah.
Yes, yes. I think the Maghrib.
Yeah, but before that, we also have a tutorial for our Islamic law of contract class. So some of them are there, so they are joining us, inshallah.
Okay, you mean you have the tutorial earlier?
Yes,
Just
from 6 o'clock, 6 to 7:30.
so tutorial, huh?
Tutorial, yeah.
So this is what? This is
Islamic law of contract, Prof. Ziad's class.
Ziad. Okay.
Yeah, but the tutorial is done by Mufti Imran. You know, brother Imran, right?
Oh, Mufti Imran.
Yes, yes. He does the tutorial. Our class is on Thursdays, Prof. Ziad.
You
So
mean the Imran, the son
no, no,
of the
the brother from Pakistan, he is doing his PhD.
Imran? Huh? Which one? Huh?
Imran Majid.
Oh, Imran Majid.
Yes, yes.
Yes, yes, yes. Okay, okay.
He's doing PhD with this thing. I believe with Prof. Bilal.
Bilal, huh?
Yeah,
Imran,
in
yeah,
mathematics. Yeah,
mathematics. Okay, yeah, yeah, yeah. Prof. Bilal, he's a scientist. He's,
yeah. The mathematician, I would say. He's a
yeah,
quantum physicist.
sure, sure.
His class is really, really interesting, very challenging, but very interesting though.
You see in his class, huh?
Oh, we have to PhD. Everybody has to take this class.
What class did he?
Mathematical something. I forgot the title. It's basically mathematics.
I think, yeah, but so yeah, I think if you're good in maths, you will
Yeah,
enjoy it very much.
yeah, but this one is really challenging class. I mean, you have to be really good in this mathematics.
Because it's not arithmetic; it's mathematics.
Yeah,
It's
you know
not
that it goes into calculus and
yeah,
differential equations and
integration, and then
yeah, quantum mathematics. Quantum is used in the quantum physics actually.
you have calculus also. You
Oh
know,
yeah, yeah. It starts with calculus.
no, populus.
No, no, no. I no, no. I know. I don't think so. Linear algebra, calculus, and he did the statistics of this thing topics. It's really interesting though.
Yeah, yeah. That is, it's basically inside the intellect. You know, it's
Yeah, but you have to have a very good foundation in mathematics though.
yeah. In fact, in order to understand metaphysics, it is through mathematics that we can understand further about God, about Allah.
Yes, yes.
So this is,
Uh, uh, Prof, we are really having challenging time trying to find that legal documentation though for our assignment.
uh,
This is really unless we need somebody who has bought a car, a house, they have this thing.
really, yeah.
Yeah.
Um,
So we asked one of our group my other class to
can you
help us
just
out.
Google like standard note contract? Can you?
I tried to find it though, but still we have some challenge. So far I had no success though.
Mm, for I think for property finance
Yeah.
or home finance, that is anybody got problem with to get home finance, BBA or Tawaru? Anybody have problem getting it?
I got the product. The PDSs you can find. That's no problem. But
No,
actually,
no,
the
no.
legal
PDS,
actual contract.
PDS is not that. It is basically the full document.
Yeah, that's the one that we are having. At least I'm having problem finding it.
So you're doing on what project? What product, Brother Shakur?
I want to do on Musharaka actually, home financing.
Home Musharaka home financing.
Yeah, I would like to do that actually.
Is it? And you should try to do something that you can get the get.
Exactly. So I have to get the legal documentation. So I want to see the what it is. I'll ask some of our other friends. Though. Actually, I have not approached any friends if they had bought
I
anything.
have mine. I have mine, but that is but I have already given to my lawyer.
Oh,
I
okay.
have
No, 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 no. I'll try to find it. If not, then I'll come back to you, inshallah.
yes,
Okay.
I have basically taken pictures
Okay.
of the document
Okay.
and I have to look for it where it is.
Yeah.
But still you have time.
Yeah, 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 yeah. Still
Mm.
have. because this March is going to be really busy for us because we have 4 assignment due by end of March.
End of March, huh?
Yeah, two for Islamic economics and 2 for law of contract, and there's a 1 midterm also. So March is going to be really challenging. So we'll see, inshallah. Thank you, Prof.
Okay, so we make dua for you, for all of you, inshallah. MashaAllah. So this is the webinar 9. We got another 3 more to come. So we will today we go into the deposit section, funding. I have posted through the WhatsApp the two paper, one on deposit, the other one is on money market. I think that will be, I mean, try to go over it, then later on I come back to it and see, just you need to read those, the one written by Prof. Ubay, then the other one is by the previous INCEIF people, Sudin Harun and Dr. Sofiza. So that, but there was an early paper. I would think that it would be good to look at the background of the deposit market. Then what are being tested, basically, so that will give you an idea. The rest of the content here will be looking at the deposit. As you know that the Islamic bank that we are dealing with today are all categorized as a deposit-taking bank, bank that takes deposit funds to make loan, right? So that has been the nature of the banking firm set up, as Islamic bank, right? So we have adopted that modality, that the funds we use to make the loan or to make the murabaha are deposit funds, and these are funds that is debt in nature, right? It is debt in nature. It is debt, so meaning that the deposits are loans that the bank takes from the depositors. So loans meaning that the bank have an obligation to redeem, to make not to redeem, to basically to provide the so-called payment when there is redemption of deposit, and so that is basically the main idea, because we have gone through the principles, and of course, even though we are looking earlier at the principles, but I've talked a lot about banking business, and so the deposit. So here I'm using some data from mBank Islamic. Right, we have the asset. We got the asset, and then we got the liability. So the liability is where we would like to identify the funding from deposit. So that is the deposit from customer. So that is basically note 21. So that's about it. That 31.1 billion of deposit fund, which is acquired by the bank, and as you know, these are basically acquired from current account and saving account and fixed deposit. So that is basically it. And so we have investment account of customer. So investment account is not a deposit. And then we got deposit and placement of banks and other financial institutions. So that is so this is bank making placement with MBank Islamic, right? About 2 billion. Right. Then we look at the 21, the deposit. This is basically what we are looking at here. Huh? So the deposit by type. Hello. So by type, we got saving deposit, and then we got demand deposit, then term deposit, right? So you can see that then we got the negotiable instruments of deposit, NICD, yeah, NICD, which is this much. But you can see that the bulk of the deposits are coming from term deposit. So there's 20.7 billion to over 51.1 billion. So you see that.
What does it mean, sir?
There's a big concentration of FDs. The bank is facing what we call fixed deposit concentration risk here.
Term deposit, this one is referring to fixed deposit, you mean?
Yeah, fixed deposit, yeah. So that is what 66%, 66%, right? So meaning that 66.6% is coming from commodity or from term deposit. What this implies is simply that the profit, banking profit can be affected, because the cost of term deposit is much higher than savings and demand deposit. So demand deposit do not give any return. Maybe because they are using the commodity murabaha, I presume that there is some return for demand deposit, but it wouldn't be much, but if the bank is using a lot of high cost deposit, so this term deposit is high cost because the return is maybe about 3.5%, so that wouldn't be good. Savings maybe 1%, and the demand deposit maybe 0.5%, right? So if the bank uses a lot of their deposit, so you got 20.7 at 3%, then the remaining maybe like 10, like yes, 20, the rest, oh yeah, the rest is about like 10 billion plus, it is at 1%, and then what kind of financing you are giving, right? So meaning that the murabaha that you make must be able to reflect the cost of funds here, you see. So if the murabaha is only charging 5%, so you can see how much can the bank be making. There's hardly much spread they can enjoy, very thin margin, right? For example, the earning would be, let's say if this is 100 billion, this is say 100 billion, then you can calculate the earning 0.05 times 100 billion, and then minus here, you can use you can use this. You can basically use this number here, right? Meaning that 0.05 times.
Masalah dia sekarang,
Yes.
itu generasi lepas.
Monthly. Okay. Yeah. Then for the term deposit, it will be 0.05 So 3 times 20, 30.7. This is for your FD, for your fixed deposit, and then plus the remaining one. The remaining one would be like 9 point, let's say 9.9, 10, let's say 10, just 10 times 1%. Right? So you can see, you can calculate the earning. The earning. So bank, if the bank is relying too much on this 31.139 multiplied by 5%, so you can get 1.1 billion, 1.5 billion, minus 3% times 20.7, there would be 0.62. 0.01 multiplied by 10. So it would be 0.1. Yeah, 0.1. So that's basically, you can get the number. You can see 1.1 billion and 0.7. So 1.5 billion minus 0.72.
52.
0.1. 0.72. So 8, 4, 5, 6, 7, 7. So that's only 0.78 billion. Because why? Because a lot of the cost has been coming from the term deposit, which is too much here, right? So if the bank can increase saving account and demand deposit, and let's say, and reduce the size of the term deposit, then you can see that the earning can be much higher, much larger. If you have, or let's say you have the opposite. So you can calculate, let's say 20 million, let's say now make it, let's say 10%. 10% is coming from FD, and the remaining is coming from saving and deposit. You will see that the earning will be much higher. Yeah, we can try that. We don't have much time today.
Is this normal among all banks?
Yes, yes. This is it's one of the trickiest part of running the bank nowadays, because banks are competing to get term deposit by giving higher interest rate, right? And that causes a lot of competition. And but by doing so, you will be able to mobilize enough FD, because you pay high, 3.5%, 3.6%, but you must be able to know how to use the deposit, right? So many banks, when they have took this campaign to mobilize a lot of FD by charging higher interest, by paying higher interest, they end up not able to make enough loan. The loan to deposit ratio tend to be low, because there's a lot of deposit which they got from this FD, but they couldn't make enough loans, to basically to reflect the earning capacity of the bank. Because if you want to make more loans, then you have to give a loan that is a bit more risky, aggressive loan. You give more loans to those who are viable by charging higher rates, right? But then if you want to be safe and conservative, you want to protect the firm from impairment, you stick to your processes, right? You make only good loans, end up having less amount of loan given away from the and based on the deposit that you have acquired earlier. If you have a strategy where the bank is very aggressive in acquiring term deposit, or fixed deposit. They're very aggressive, so they are able to bring more people to make placement in the bank. But if the bank can make more loans or more murabaha, that is good, But the problem is they could not, right? So the LD ratio is low, right? And you end up meaning that if you are able to obtain billion worth of deposit, right? You are only able to make, let's say, 60% of these 31 billion as loans, because there's no business, right? There's no business. To make more business, to do more business, you have to be aggressive. You have to allow the non-viable customers in, and so you give a lot of unsecured loans at higher rate. But that is quite dangerous, because the default rate can be very high, and it may backfire the bank, right? So this is the problem of Malaysian banking nowadays is because of this this we call it deposit term deposit or fixed deposit concentration risk. And this is happening in almost any bank today. You can take a look. You can even write a thesis on this, thesis on the matter, master's thesis. You can. Okay, so that is one. All right. Just, we have the investment account. I come back to the IA later, but let us look at the deposit here. Look at the deposit. These are some number here which I have. Okay, this is Bank Negara. I think this 2020. Wow, okay, quite updated. 2020. Yeah. So we are already 2020. Of course, the COVID-19 started here, February, March. Yeah. So we are in June here. So of course, this data is coming later on. But you can see that the deposit that the bank accepted, these are coming from individuals, coming from businesses, coming from government, coming from foreigners, non-residents, and then non-bank financial institution. Okay, these are basically non-bank financial institution. Okay, these are like takaful company putting money with the bank, Chagamas putting money. Yeah? All these are non-banking companies and others. So you can see that if you look at the current in June 2020, so we can see that okay, from 2019 June, you can see the trend, right? You can see the trend, and but then you can see that in the middle of the COVID-19, there is a spike in the growth of deposit. Yeah? So this is an evidence that during the COVID-19, deposit grow. There's a growth in the deposit, right? What causes this actually?
Maybe when people take out their money from the stock, they put the money in the bank.
But people are afraid that the stock market may collapse, so they sell off and then.
Yeah, they sell, they get the cash and they put in the bank.
Okay.
Yeah, they want more cash.
Yeah, so cash is king,
To spend.
Yeah, so basically, okay, then convert stocks to cash, right? And then the other one, what else? what causes the increment. So you can see that the increment, there is an increase uh, by the household, the individual. There's a slight increase here, right? It's a slight increase. Oh, yeah.
I think due to
Ah,
financial constraints, so they need money to spend.
But if they need money, they will withdraw. Then there will be less deposit. But here we can see there is some increment in the deposit of individuals, people like us. So what
They
could
got they got EPF
Is it
and
because of safety?
because of
Safety.
accepting what is that?
Yeah.
Safety.
Yeah.
Okay.
Because in COVID, uncertain condition, right? So they tend to save more as compared to consume.
Okay. So meaning that they prefer not.
they got from EPF, so they save.
I think usually when people spend, I think what was mentioned just now that people save is because usually when they go out to work, they spend along the way, the toll,
Yes.
but because they stay at home, they have extra cash that they don't know where to put, so they put in the bank.
To work from home, huh?
Yeah.
From home, they would
And
increase.
EPF withdrawal.
But that time,
Would it be on moratorium?
Okay. We could work from home, increase saving because we pay less toll, we pay less petrol, yeah, and so on. Okay. And then number 4, somebody will say what?
moratorium, yes,
Moratorium?
to pay for their loan.
Because they don't have to pay their loan.
Okay, moratorium. But then after the moratorium, they have to basically repay.
Yeah, but they save first lah.
So meaning that automatically when we have the 9 months or 6 months or 9 months, 6 months.
Until December, right?
Yes, because we started in March the moratorium. So people are not paying their loans, so the deposit increases. Okay.
But I think it's not that they chose to save because the money is already in the bank. So the bank didn't collect the money from their bank account to the loan account. You know what?
Yes. Yeah, meaning that they have their money, the salary, but you didn't pay the loan.
Yeah, the bank didn't take. Usually the bank take monthly, right? But because of the moratorium, the bank didn't take the money in their bank account.
If you,
standing instruction.
Standing instruction or by assignment, that would be. And then I think the EPF, normally EPF, if you withdraw EPF, but then it would be for consumption lah, right? Because it wouldn't be smart to withdraw. EPF will give you higher return compared with the bank deposit. Yeah. So most people will withdraw from EPF to cover their expenses. COVID-19, some people lost their jobs.
INCEIF fees.
So the EPF may not be a factor lah that would increase the savings, because once you withdraw, you may want to sell, you may want to spend. The other one the last one would be what? Last one would be you less travel, less consumption,
Less eating out.
less eating out,
Lifestyle, change of lifestyle, I guess.
Yeah, so lifestyle changes, so that causes people not to spend, and that explains the increment in this so-called saving, right? But then we have to understand, despite the increment in saving, will the bank be able to make loans, right? Because if saving goes up, will that translate into murabaha, new tawarruk, or new loans, right? Because we are in the COVID, and people are not having enough opportunity to travel, to spend, right? And then there's less less capacity to do business, and there's less demand for loan, maybe less demand for loan to expand businesses. So that would be the in Canada, the Canadian bank, they are making money during the COVID-19 pandemic, right? So there is a talk about any of the windfall, the extra profit during the COVID-19 should be so-called tax at a much higher rate compared when they are in the normal mode. Yeah. So maybe like corporate tax on profit is maybe like 40%. But then if there's a windfall of profit during the COVID, then that additional profit may have to pay a corporate tax of 50%, like that. So why is it that the banks in Canada were able to make more profit during COVID? Maybe one, we have more deposit. They have more deposit. And then number two, maybe, so that would be a good. Is it because people spend as usual? Is it because so that would be a good thing to look at. Okay, so that would be we got there is an increment in deposit from the non-banking financial institution to the darker green, then dark green, and then there is also increment in residents, and then there's a blue. So there is also the savings from businesses is also increasing during the COVID-19, right? So
Prof, in Canada, the government has provided some financial relief to people, something like US.
yes, there's a lot of basically.
But that is for spending, right?
No. Individuals got some financial assistance from the government.
Yes. You see,
Actually, government send them the checks, and actually better they do the direct deposit to the bank accounts.
okay, checks that they
Government actually give them the individual people at a certain income level.
Yeah.
Government provides them some financial help.
All right. So like it's similar to the stimulus package.
Exactly, something like that.
Yeah.
Exactly.
There will be. You see, there's one paper, our Malaysian. If you look at the financial stability report for 2020, Bank Negara, right? Financial stability report 2020 up to June. In fact, I think I took this from that report. This diagram. The entire report is about how the banking system or how Bank Negara is managing the so-called regulating COVID-19, right? So what are the so-called packages? What are the incentives offered by government? And then how that impacted banking companies and takaful companies. So take a look at that, yeah. Bank Negara Financial Stability Report 2020, and you can download it right away and take a look. So it's quite a good coverage, but it is a paper that require you to understand a bit more about risk management as well, because there's quite a number of terms in risk management that you may not be familiar with, but for in exam, maybe I think in most of the exam during the COVID, we will ask you things about how COVID-19 impacting
Does this
Islamic finance or banking, so this is a good. Yes, sister.
you mean this is the outlook by the government?
No, this
on
is data.
data, but this is 2021, right? So you mean they use the existing data to outlook in 2021?
Yeah, this is how the COVID-19 has impacted the banking system and the banking system. So they look into the various financial ratios, bank financial ratios, how bank perform during this COVID-19. Plus and that document will give you an idea what are the measures taken by the central bank, in providing facilitation to banks. What are the risk management? What are the risk management? What is this? Facilities that were given by the central bank, like reducing the reserve requirement, and then the so-called allowing the bank to, you have in Basel III liquidity coverage ratio, and a few more things that the central bank uses to help the bank in order to have access to liquidity. Yeah, because they were thinking that maybe because of the COVID-19, there isn't enough funds for the bank to use to make loans. But now we have this idea that there is a lot of deposit payable to the bank because of this, this factor here. And again, because reserve requirement is set to 0, so the bank has a lot of cash, so they don't have actually to borrow, to borrow in order to make loans. You have extra cash, and that cash will be used to make loans. Yeah. So this is the other one would be okay. This is the funding, the total funding. But we are basically looking at the entire banking system, conventional and Islamic, right? And you can see that the composition of deposit here, we are 28 and 209. Let's say we go to 2016 over here. You can see that the bulk of funding, because the funding is coming from deposit. It is coming from debt here. Debt is the tier 2, the sukuk, right? And then equity, which is the tier 1, right? So the total funding, so they're talking about the funding sources, right? So meaning that the total funding, meaning that deposit plus debt plus equity, that is total funding.
What do you mean by tier 2?
Tier 2 is the money that the bank raised as capital, tier 2 capital, which is sukuk.
Okay.
Remember when you were discussing earlier about capital, right?
Yeah.
Bank here, just I repeat, so we have 100 billion of deposit, yeah. And then we got let's say 10 billion worth of capital, right? This capital, and this capital is made up of 2 components: equity capital and then debt capital, right? So the equity capital is tier 1, and debt capital is tier 2. So usually, like like the equity capital must be more than the debt capital. So let's say we got 8 billion in common stocks, and then 2 billion is coming from sukuk. Right?
Why it must be higher than the debt?
Yeah, it has to be higher because because we do not want the bank to be, you know, when we talk about the that is risk management. Equity capital, okay, capital that the capital that the bank owns, you know, the capital that the bank owns, which is the equity. That is the capital that the bank owes. To whom? To whom does the bank borrow?
Or bank.
From the investor, right? So investor will lend to the bank money as capital, right? And but again, you will see that when it comes to ownership, when it comes to bank ownership, it is always equity that will be counted, right? You know, because that doesn't provide any power to basically direct what the bank is doing. It is by way of equity, right? So in the sense that through equity, the bank will be able to garner power. You know, equity again, as you see when the bank goes public in the sense that 51% of the stocks is owned by the so-called interested party, the majority stakeholder. 49% is owned by the public, right? So the public like us, we buy, you know, small amount of the share, right? And that make up 49% max. And 51% is coming from the owner, you know, few individuals, you know, few institutions who will basically control how the bank is being run, right? So the equity component of capital is always higher than debt. You know, this is because, you know, when, you know, because losses would be covered by whom? If there's a loss, 100 billion worth of murabaha, if there's a loss like 30% loss to the exposure, 30 billion loss, who will absorb? Who will absorb the? It has to be written off from the equity first, from the capital, right? So yes, so basically, so go ahead. The tier 1 and tier 2, I remember doing it earlier, right, when we looked at the financial statement. So look, somebody who's asking this question?
Me. I'll
Take a look at it, yeah.
all right.
Okay, that would be, and so you can see that in 2016, total funding 76 is coming from deposit, you know, and then we got 6% from interbank borrowing, and then 5%. The long-term borrowing is coming from the debts, yeah. It's coming from the sukuk. Long-term borrowing, capital. This is shares, common shares, stocks. Then deposit, of course, the deposit here we are dealing with the current account, saving account, you know. And then the fixed deposit, we got the NICD also here. And repos, later on we go to talk about repos in the money market, right? Repos. But you can see that the trend from 2008 to 2016, the trend is a fall in the deposit market, right? There tend to be some contraction in the deposit market. So meaning that the money that was once placed here and here is going out from the system. Okay? Why is it that there's less deposit in 2016 compared with 2012? Because as we move, you know, towards the future, there is economic growth, you know, there is more production, there's more jobs. So we assume that if more people will have money and they will make placement with the bank. But now, you can see the trend that there is there's a dip in the deposit market. Are we saying that people may
Risk averse.
risk averse, or maybe they would like to put their money elsewhere? They may put it in the unit trust or some other funds, that can give them better returns compared with deposit. Right. So this can be, a trend that is not good news to the bank. So what will happen if there's a contraction of deposit? So the bank would have to resort to another alternative, which is more expensive, right? So if the bank, because deposits are falling, they need deposit to make loans, right? So they will go to the interbank market. So they will borrow funds from the interbank, but again, the interbank rates are very high, right? Compared with FD, right? So that would be, that will reduce your earnings and so on. So this is capital. You can see there is an increment in capital, right? Because banks are making money, right? So banks, when they make money, they will distribute the dividends, and there will be also some money that they will retain, and that will become part of the banking capital. So over the years, you can see capital has risen 9-10% to 12%. But deposit is moving down. And then the money market, right? So you can see the money market still dominant, still useful here. Long-term borrowing. So this long-term borrowing, this is another long-term borrowing. This is the one that I have posted earlier. This is the NICD, UNID, RNID. I've posted one. This is negotiable Islamic negotiable instruments of deposit, but now it is NID is normally it is a short-term deposit. Short-term deposit, 1 week, 1 week. It's a deposit, but it's very short-term. But now
Never heard of it.
Pardon?
I never heard of it.
Oh yes, you should hear about it. A negotiable certificate of deposit, NICD. NICD, right? This is money that you can place with the bank, but in a very short duration, very liquid, 1 week, 1 month, right? So you place with a bank, let's say for $1 you place 95 cents. So upon maturity, next week maturity, you get back $1. So you earn 5 cents. So this is like a discount placement. The RNID is another product. This another product. Let me see. RNID. Okay, this one. This is the retail negotiable instruments of deposit, right? So you can come in to do investment, long-term investment, 5 years, up to 5 years, right? Where can you find? Because normally like FD, it is up to 1 year, 1 year, but but this is investment, and so this is allowed a discount. You put in 9,000. After 5 years, you get 10,000. So you got some earning from the difference between the initial placement, and when you redeem it at a full amount, that difference would be the your earning, right? So this is another. I'm not so sure how this would be so-called innovated to become Islamic, but this is basically still conventional, because for Islamic you may have to use ba'adain or sale of debts, or debt trading in order to do this RNID. So never mind. I'll just so okay. We don't have much time here. Then so this is the money market, or the bank's external debts. So meaning that if deposits are not enough to sustain the business, the bank will have to look for additional funds, and these funds are coming from the interbank borrowing. So this is the interbank money market, yeah, and also by by non-banking institutions. These are also, categorized external fund by instruments, and then the FI placement. So this is again financial institution making placement with bank, right? Debt security. So this is the issuance of onshore bank external debt total funding. Debt security. This is the issuance of, I presume, sukuk. They will talk regarding issuing sukuk, because if the bank can issue sukuk, in order to attract funds, but these sukuk are not meant for capital purposes. It is meant for lending purposes. Okay, so in the sense that we got deposit fund, right? And this time there's a sukuk fund here, right? Then here we have the capital fund, right? So bank will issue sukuk in order to obtain the money. That's 100 billion, right? So this 100 billion may be paid at like 4%. It will be used by the bank to make the murabaha, or to make the loans. So this kind of instrument the bank is using will require the bank to make loans or murabaha that is giving higher yield, because the cost of the sukuk here is much more compared with the FD. So these are some of the, I'm not so sure in Malaysia whether we have that yet, but there was some talk about it. Of course, the earlier one that I was saying, the RNID, this is not the sukuk. This is basically the so-called the NID, but it is for retail investment, right? So this is for investment. This is also for investment. So the bank is looking for capital market investor, to put their money with the bank, which the bank would use to make murabaha or to make loan, right? So that would be. Just take a look over there. This is the main assumption, the one that we have been looking at earlier here. This is basically the, I call it assumption because the bank, the regulators, the central bank, these are the ones who are making the rule. So we assume that this is a rule that is workable and that will achieve a certain end, which is Islamic banking. Yeah. So what you see here is that this is the funding. So you're basically looking at the same idea. This is the funding. And the funding is coming from three sources, right? You got capital. This is the shareholder fund. Then you got customer deposit. This is the deposit. Yeah, this is 40%. Then shareholders fund is 25%. Then the rest will be coming from interbank borrowing. So this is wholesale, right? This is wholesale fund, 25%. So this money is pooled here, pulled together, so that it will be used to make the loan, retail, non-retail, and marketable security. So meaning that you have murabah, you have sukuk, you got cash here, right? Then blended net return, meaning that all of this asset is supposed to generate a 4% return. Blended net returns of 4%, and they will distribute this return accordingly, and shareholders are getting 3.38, and then depositors are getting 4.3%, and then interbank borrowing 4.10%. But I don't know. This is but again, for a long time, I am suspecting this kind of not proper, not proper, because you cannot use shareholders fund to make loans, right? Because we learn in risk management in Basel that capital is only used to support the loan, right? Capital cannot be used to make loans because the cost of capital is much higher than the cost of loans, right? The cost of loans is basically the deposit, right? The ROE of capital is high, as high as 15%, right?
It will create conflict, right, sir, if we use shareholders' money?
What is it?
It will create more conflicts if we use shareholders' money to make loans.
Yeah, that's why I don't understand. The Bank Negara has been, in all courses, in all illustration regarding the users and sources of fund for Islamic banking, they were using this kind of approach of pooling all of the funds, capital fund, deposit fund, and wholesale fund into one, and using these funds to make the loan, right? And you can make loan based on this, based on deposit fund and money market fund. But capital fund cannot be used to make loan because the loan will be stuck there for 30 years, 20 years. If there is a default and you need to write off the loan, how are you going to sell your loans in order to get the liquidity? If this usually your capital fund, is kept as securities, right? MGS. So if there's a loss, then you can sell the securities and you can cover the losses. Right? So if, in the sense that if this shareholders fund is used to purchase this security, right? Then that would be, that would be the way how to do it, right? So meaning that retail financing and non-retail financing, we are going to use customer deposit and interbank borrowing, right? Whereas the shareholders fund, it will be used to buy bonds, But then securities, you need to break it down into the liquid one and the less liquid one, right? Short-term securities, medium-term securities, long-term securities. So what kind of securities that is for parking the capital fund? So it has to be short-term security, right? That can easily be liquidified when there's a need for it to be converted into cash. So there have to be, some discussion regarding this matter, because I have read the literature and they don't actually explain how the shareholders here, the shareholders funds and retained earning, the return of 3.38%. So how could the shareholder fund are getting 3.38% when the ROE of bank, at any time you can see that it is always double digit, but here it is shown as single digit, and they are as much as the deposit yield as well as the interbank yield, right? So this is, to me, this is a bit of a not contentious, but okay. So so the rest of the rest of the Islamic deposit, you can just go over. So this is the pre-iftar. So you got transaction deposit, which is current account, short-term deposit, and then short fixed term. Right. So yeah. So again, this is the types of deposit that you can see earlier here. Right. You got total deposit. Right. Total deposit, and then you got your saving account. You got your demand deposit. Then term deposit. So these two, and then these two, right? And you can see as we go through the diagram here. So categorized as transaction deposit, which is current account, saving account, and we got term deposit. Term deposit, so meaning that there's a 1 year to 5 years term, meaning that you can only enjoy your return at maturity. So if we withdraw before maturity, then there will be penalty, or you may not be able to get the amount that you are planning to get. Right? Transaction deposit, you can withdraw anytime you want. There's no return to it, no return to this current account and saving account. Maybe pre-IFSA 2013.
There's no more Wadia account, right?
Wadia account, no? We have Kardu now.
No, the one you showed just now was Wadia, but right now is
Now, yeah. Now, for M-Bank, your saving is based on CM and Kardu, right? So the Kardu and the CM, these are the prevailing contract the bank uses for the deposit product. So,
Bank Negara asked everyone to change from Wadia to card. I think that's
yes. So Wadia, again, Wadia Damana.
Yeah.
There is some not controversy, but because Kardu Wadia Damana, they tend to give some indicative rates, but so that would be the contentious issue.
Yeah.
But in Kardu, it is strictly prohibited to give any indicative rate. So if there's any rate indicative, it is riba. So it's very easy to regulate Kardu product compared to Wadia Damana. Right. So many of the banks are using Qard and CM for Tawarruk product. And then of course we have the investment account. And then we got the pre-IFSTAR. Pre-IFSTAR, you must remember that before 2013, investment deposits, they call investment deposit. So this is the Mudarabah investment deposit, right? So under we got Mudarabah, there are some of the fee-based investment account, fee-based investment account. So that is, there may be lah. I have to check lah. But the dominant product has been the Mudarabah investment deposit, right? A deposit, but then it is an investment. So that doesn't fit, you know. A deposit must be a protected, capital protected and fixed income. That is a deposit. But when we apply the term Mudarabah to the deposit, so it becomes, you know, an oxymoron. It becomes something that is conflicting. That has happened for almost 30 plus years in Malaysia, and so that because the financial literacy is very low, right? And consumer and you know, the regulators, they themselves, there's no, I mean, that is a culture here. The Sharia scholar themselves are not really dependable for us to take a second look, right? So they themselves don't understand that any money that we make or any placement we make with the bank under the term deposit, they don't know that it is a loan, right? They don't know that the Basel require the bank to hold capital against any loan or any murabahah funded by deposit. They don't know that, right? So, but Bank Negara knows about it. You know, they should be able to be more, you know, vigilant and having a stronger oversight over this matter. But that has been the case. We at the academia, we have nothing to do but to just, you know, say it out and nothing falls to the ear. And so we get short-term deposit. So just take this short-term deposit, yeah. NICD, and Tawaruk. These are. I just want you to just give a focus on the this note here. This is the current product that is available, deposit product. Then you look at the money market, the non-deposit product, which is the interbank borrowing, and the rest. So that will be later on. We can go back into that here. So meaning that we got deposit, we got shareholders fund, and we got interbank borrowing. So these are the funds that is instrumental in the banking operation. These are some of my own notes. So you can just.
How can we make those changes, sir? The one that you, the issue that we raised just now. How can we make such changes?
You have to be at the so-called regulator side. You have to be, meaning that
With the committee?
to
be part of the committee?
To be part of the committee cannot. You have to be a full-time officer there. But then even if you are there, but you have to listen to your boss, you know, and if the boss understands and he wants changes, then he will do it and he will direct you to do it. But if you are the so-called innovative and critical type, but then if your bosses are not in line with your thinking, you better not fight, right? You have to be subservient. So this is basically at that level, right? So that depends a lot on, you know, on you see, for example, when you are like me, or some of the academia, we do teaching, right? We do lecturing, and then we have to supervise students, a lot of students, you know, and at the same time we have to do research. So the research that we do are normally academic in nature, right? So what we did, we will basically collect data and we run this testing, what sort of issue that you wish to investigate, right? And you will use data in order to justify the claim, which is your hypothesis. Right? So these are an academic exercise that would normally landed on the shelf, right? You get your publication in Scopus and in the Q1 journals, and that would be the end of it, right? And sometimes these papers, nobody read the paper except you guys, you know, right? People at the central bank or people at the big corporate, they don't read the journal papers, right? They don't have the time. I mean, we are not important at all, you know. So unless there is a culture in which there is so-called you know, a good alignment between the regulators and the universities, you know, which is basically happening in you know, in the developed countries. We have top academia who are mathematicians, you know, who are you know, who upon you know, upon graduation, they basically work. They work in the Federal Reserve Bank. They work in the Treasury. They work in, you know, big accounting firm. So they will influence policy, right? They will influence policy. So when we have people from the university who are smart, you know, and they will join the industry, right? Then they will influence the policymakers there. But what happens here, that many of the people stays in the university. There's a brain drain. The good ones, you know, the good ones may want to just leave the country, or, you know, join the corporation, big companies, right? Are you saying that the one who are leftovers will join the university? So this is some of the, you know, debate that universities do not have enough resources, you know, to do the real thing. So the academia themselves are only university. For me, for example, I'm a university economist. I'm not a banking economist. I'm not a, you know, basically labor economist. Right? I'm a university economist, you know, and most of us at INCEIF are university economists. A few of us are, you know, most of the people at INCEIF earlier were economists, yeah, right? Some are coming from the finance area, right? And so if you can influence the place that you are working, you are from, let's say you are from LSE, you are, you know, you are in a dean list, okay, so you are shortlisted and you work with the central bank, then you can influence policy because you are good enough to influence.
Hopefully, all of us can make such changes.
So you
Now
guys,
we're here.
some of you, you know, who are able to join the big companies, you know, you should be go into the rank and file, and and see how you can bring your ideas to the top level, right? But that needs a lot of emotional quotient apart from your IQ to do that, right? And so many of the academia, simply leave the university to do something else because they don't find it interesting to be academia in Malaysia or in Indonesia or in other places, because the culture is a bit different from that in UK or in Europe or in the USA. So what more, the central bank is giving a lot of power to the Sharia community to captain the Islamic finance sector, right? So they're not giving it to the people who are having finance degree or economic degree, because we look at the financial system as a so meaning that it is a macroeconomic situation, rather than granular issue that were basically attended by the Sharia committee. So we look at financial stability, we look at income distribution, we look at financial inclusion, right? We look at what else? Banking performance, right? These are very economic wide issues that require a lot of economic and financial knowledge, which is very difficult for us to get it out at the Sharia committee level. Right? So this is the predicament, and never mind. You can ignore this wadi'ah. I'm not very interested. The mudarabah pre-ifsa also, I'm not going into it now. Mudarabah investment account pre-ifsa. So this is again the way how the bank uses a mudarabah contract to manage a deposit fund, right? So they call it mudarabah investment account or fixed deposit. This is pre-ifsa. So if you have amount of 50,000 dollar here or ringgit, your placement 50,000, and the tenure is for 6 months. Profit rate. So this is a calculation based on an indicative rate. Yeah, of 5.6%. So meaning that it has been realized, the rate has been realized at 5.36. The profit sharing ratio of 60/40. So the profit is the principal times the PSR. Oh, gross profit. Is gross profit. So meaning that 5. Gross profit PSR. So the PSR is at 60/40. So the profit that goes to the 60 goes to the customer and 40 goes to the bank. 50,000 times 6 times profit rate times number of days divided by 365. Yeah. Okay. I want to check this. If you look at the, let me just check the. Okay, if you look at the commodity murabaha formula, so this is the formula that they took from the conventional FD. This is the profit to be distributed, which is the nominal amount of money. I'm not going to Taurus, I'm just trying to check the formula earlier. So the profit, right, would be equal to the principal placement, that is 50,000 earlier, you know, times the rate, yeah, R is the profit rate, that is 5.3, it is 0.053 earlier, times T, times T will be the tenor, number of days, which is what is T, right? Then divided by, this is 5, right? Okay, and then when we look at the one we had earlier under the Mudarabah formula, let me see here. So we are looking at 5.36. Here is 0.53, okay, times 180. So this one would be, I think, I presume that this would be profit rate. This is a profit rate. Or is it the gross profit? Gross profit. So meaning that so it cannot be gross profit because this is the profit that we are trying to compute, right? So it has to be a profit rate because the calculation here is the profit rate. Yeah? Right. So it has to be a profit rate. Then we are looking at but then we got times 0.6. Never mind lah. I think this one I want to take a second look. Yeah. So just don't bother this. I will not bother you with this one. I try to check. I will check again because I'm not so comfortable with this number. The one that we are interested in would be the commodity murabaha placement, right? So this has been the product of the century. So you can see that the CM here takes a big the term deposit, right? Term deposit. Oh my God, what am I doing here? Oh,
Above, yeah.
yeah. Okay. Okay. So the term deposit, as you know, is comprised of these two, right? And CM is taking the most here, 20.7 billion. So CM is the dominant, right? So, but here again we have the saving deposit using CM, demand deposit using CM, and then term using CM. So it is all CM, right? So you got 20.7 billion in term deposit, fixed deposit. You got 8 billion for nine. So almost 30 billion of deposit are financed by are contracted under commodity murabaha, right? So that's a big amount, right? So that is why this you have to know what's going on. So it doesn't mean that if I don't agree with the Tawaru, but we need to know what's happening. So it doesn't mean that we're going to reject or not going to look at it, right? So Daraba, and then no, this is old notes. So this one is okay. So we have one diagram here. This is one diagram explaining the process. There is another one here, right? And then we got the description here, the placement, right? So you must know. I mean, I will not ask you what is CM, or how do you explain the process of conducting the CM. There will not be the level of graduate studies, right? Because you can always, took it from the note, or you can just Google, you can find a lot of them around. But you must understand the basic here, right? So this is a Tawarruk deposit placement, yeah. So we got Tawarruk or CM financing, or we have a CM placement. So these are the two things.
Sorry, what is CM?
CM is this one. CM is the commodity.
Oh, commodity murabaha. Okay.
Yeah. So we can use the acronym CM or Tawarruk. Why is it called commodity? Because we are using the murabaha not as a sale transaction. Like for example, we buy a car because you want to use the car, right? You buy a house because you want to shelter, right? But this commodity murabaha, we buy the palm oil, or we buy the crude palm oil, or we buy the resin, we buy the copper, not to manufacture the copper. We are using it for liquidity, right? So that's the term they use, commodity murabaha or tawarruk. So the main idea is this. The main idea is you have this amount of placement. Let's say you take 100,000, you have $100,000 that you have withdrawn from, or maybe you have got a bonus 100,000, or you withdraw from EPF. Of course, EPF will give you more than 3%. But wherever it is, you got a loan, and then you put some in the deposit, and then some you spend for your businesses. But that placement is for 3 months, and the rate is at 3%. Yeah. Then so the number of days will be 91 days. So placement date is 1st of April. Maturity is 30th of June. So we got that 91 days. Yeah, 91 days over here. Then so that's the profit. There's a profit, and there's a sale price. Right? How do you obtain the profit? So that will be here. Right? So your profit will be your placement of 100,000 multiplied by the rate of 3% times T, 91 days, so divided by 365, right? That would be 747.95. Okay. Then we put it there. Then we got sale price of the facility. So the selling price is equal to the cost, the deposit fund, plus the profit. Basically, 100, yeah, and then plus the 747 plus 5, right? Because the contract will be based on the selling price. So for us to use this number, so we need to go to this narrative, right? So the CM is okay. These are the 1, 2, 3, 4, 5, right? So the client, right? The depositor, he is placing money with the bank. So he will buy the CPO from the vendor via the broker, yeah, via the broker. So then he got the CPO, and then the client uh, sells the commodity to the bank. The bank will pay when? Will the bank be paying on the first?
No.
No, right? The bank will pay on the 30th, right?
Yeah.
So
Yeah.
meaning that the bank will be paying a price which is not 100,000, but will be paying a deferred price or a credit price, right? So that credit price will be the selling price, which is equal to this, right? So bank will pay the depositor a price of 10747.95, and payment will be made at maturity on 30th of June 2014. All right. Then you will be, when you do your placement, your placement will be used to buy the commodity. You will not be given to the bank. Of course, the process will be finally that money will go to the banks, to the bank finally. Meaning number 5, the bank will acquire the cash. Right? So meaning that when you look at the balance sheet, it will be like as if you are placing money 100K with the bank, but you have to go through the stages. You got to buy the commodity first, and then you sell it to the bank on credit at 10 plus, right? For the bank, when the bank acquire the ownership of that CPO, he will sell it to the second vendor on cash basis. The same day, on the first, when you sell or when you buy from the vendor, then the bank will get delivery from vendor 1, and then the bank will sell it to vendor 2 for cash. Right? So vendor 2 will pay cash to the bank, and the bank gets the deposit. You see, in the loan market, you simply put your money in the deposit. No need to do anything. Put your money, and then 3 months after, you get 100,000 plus the interest. But in the Tauruk, you got to first go and get the CPO, and then sell the CPO to the bank. The bank will pay you 3 months later. Then the bank, after getting the delivery from you, the bank will sell it to the second vendor, and they will get the money. And you got so conventional bank will have to do 1 step, but Islamic bank will have to do 5 steps. You see, so that is the Tauruk deposit. So it is the opposite to the Tauruk financing, where the bank will buy the CPO from the first vendor, and then later on you will sell the CPO to the second vendor to get your liquidity. Right. So this one, in our course, there will be some calculation here and there, So this can be one of those simple calculations that you should be able to do. And if you got problems with all this, okay, yeah, okay. The Tauruk deposit, I think you can just go over what I have gone through here. So it's basically the same, yeah. And then this is another way to do it here. And then this is the the retail NID, meaning that the current NID, negotiable NICD, negotiable instruments of deposit, right? That would be very short term, but now they are offering a longer term NID up to 5 years. So this can be another product that can attract more funds into the bank. The next one will be the investment account. So as you know, the IFSA 2013, they have instructed all banks to segregate funds, investment fund from the deposit fund. Yeah. So we got this. This is 3-IFSA. So in 3-IFSA, you have deposit fund, and deposit fund are breaking down into current account, saving account, and into fixed deposit, right? So the fixed deposit, they are called Mudarabah investment deposit. Mudarabah investment deposit. Right? So this current and saving account are based on what they are, Damana, right? So this MID, so this is for investment, but it is still a deposit, right? So basically, there is no other fund except deposit fund, but the MID, Mudarabah investment fund, investment here is lumped under deposit. And at the same time, the Mudarabah investment is a deposit. Yeah, MID is a deposit fund because it is a deposit fund, because it is a loan that actually the bank takes from us. So meaning that if you have a MID, you can withdraw the money. You know, you can withdraw your capital if you want. So if you have a 1 month MID, 3 month or 6 month or 9 month or 1 year, right? So if you want to, let's say you want to keep it, your contract is like a 9 month MID, for example, and you are making a placement of 50,000. You want to withdraw on the 6th month, you can withdraw 50,000. You know, there's no penalty, there's no depreciation in your placement because it is a loan. Even though it is called a mudarabah, you withdraw before maturity, you still have rights over your placement. Maybe you may not be able to enjoy the return. The return maybe you can only get upon maturity on the 9th month, right? You withdraw 6 months again, you may get 50% of your return, but the principal amount is guaranteed. Yeah, this is FD, this is Mudarabah investment account. Mudarabah is PLS. It should not be guaranteed. Right? By nature, the PLS is an equity. There is no certainty about how much you have because the Mudarabah is subjected to market movement. But because it is a deposit fund that uses a Mudarabah contract, which one will have more weight? Is it the Mudarabah or is it the deposit? Which one? Which one has more weight in this particular setup? Of course, it's the deposit, right? The Mudarabah is just you know, it's play, yeah? Because you just massage the PRS in order to provide an indicative rate or rate that you need to to basically actualize, then you will basically, I mean, the bank will basically uh, do you know, the so-called appropriate way to ensure that you get the rate that is being indicated. But there is no loss. You know, there is no loss to be faced by the Mudarabah investment account holder, because that Mudarabah investment deposit is a deposit account. It is a debt that the bank owes all of it, right? That is very, very dangerous, you know, and as the Islamic Bank move forward, you know, through the financial crisis, you know, with some of the observation from the academia, you know, and there is some inherent risk in the Mudarabah investment deposit, yeah, and eventually in 2013, the new banking law, IFSA, you know, require bank to segregate Mudarabah product with the deposit product, right? So this is IFSA. In IFSA, we got a deposit fund, which is current saving and term fixed deposit, right? And there has to be a line across to basically draw a clear line what is a deposit and what is an investment fund, right? So that if there's an investment fund called Mudarabah investment fund, it must be based on a investment structure or Mudarabah structure, where in a Mudarabah structure or equity structure, there is no capital protection and there's no fixed return. Yeah. So that is basically, so meaning that we want to make the Mudarabah investment deposit or Mudarabah investment fund to be a compliant product. If it is not compliant, then in risk management, we got this so-called Shariah non-compliance event. Shariah non-compliance event, an event that will evidence the fact that the bank running some operation that is not in accordance with Sharia, right? So when this Mudarabah investment deposit stays long with the bank, it will likely to be declared as non-compliant because the deposit nature of the fund cannot allow the use of Mudarabah, because the Mudarabah and deposit is totally opposite. Right? Deposit is a debt, Mudarabah is an equity. How could they exist together? So that would be the Sharia non-compliance danger that may occur if the MID is basically still being utilized in the banking operation, right? So now, if some of us wants to make placement where you still want safety and you want fixed income, then you go to the fixed deposit that uses the Tawarruk contract. Yeah. And then if you want to do investment, and meaning that what is it, investment that you want to make more money because you take more risk, then this would be the avenue to take, right? So this would be the so-called the origin of our future here. If the bank wants to do something that is different from what they're doing now, let's say the bank wants to do real sector financing, the bank wants to finance startups or SMEs, or they want to go into projects that is not palatable if those are funded by deposit, then the investment account would be the fund that would make it possible for bank to do the unconventional financing. Right, so the investment account is now a real PLS account, right? So we got profit sharing, profit loss sharing, or PLS account, IA, and then we got the deposit. Okay, so that is basically the so-called the idea that has been around, but then suddenly, there is a light at the end of the tunnel. The central bank, is finally, saw the light, and that ISA that allows the bank to offer what we call an investment account. So this is an equity. This is not found in any bank, right? So this is an equity account. This is a debt account. This is a deposit fund, right? So what is the difference between the two, debt and investment account? So if you want to do, let's say, real estate, if you want to do a murabaha, a real murabaha, for example, let's say asset financing or machinery financing. Let's say in the COVID-19 situation now, many people are going into businesses, small business. So I can see a lot of people selling food, selling bread, selling lasagna, selling cookies. So I've seen that people are buying these big ovens, where you can bake your cookies, right? Your pizzas and your lasagna, yeah. And then this oven sometimes $10,000, one unit, right? So you may want to take a facility, but of course, no bank will give you a loan 10,000. Maybe if this particular machine require 100,000, okay, 100,000 for example, then it requires the bank to purchase this machinery from the vendor, right, and sell it to you on credit. So we're talking about murabaha by purchase order. That is one of the product that we will discuss later, MPO, murabaha by purchase order. So you as a trader, you as a company, as a small business, you plan to buy this machinery, which is cost you $100,000, right? And you're not wanting to have cash, yeah? You want cash so that you can buy that equipment. Of course, if you have collateral, or if you have some sort of security, maybe you can go to the bank and ask for a tower facility, and the bank will assess your position, and if you qualify, then you can take a Tawaruk financing, and the bank will do the CPO, buy and sell, and you will get your cash, right? You get your 100K, and then you can buy that machine yourself from the vendor, right? But if you want to do the according to the narrative of Murabaha, that if the bank will buy the asset, and then the bank will sell you the asset on credit, then that would be, because if the bank wants to buy, if the bank uses the deposit fund to purchase the asset, and then sells to you on credit, it would be very difficult for the bank to do, right? So what would happen if the bank purchased the asset from the vendor and the bank hold it for a while? There will be what? There will be capital requirement, right? So if you buy the asset using deposit fund, and that asset is bought with an intention for trading purposes, there is a capital charge, right? So under market risk, you got 15% multiplied by 100K. You have to hold capital of 15,000, yeah, 100,000 of exposure. The bank will have to hold capital of $50,000. That is the capital requirement, and no bank would want to do it. Yeah, and the bank will have to basically get a location where they will store this asset. Yeah, so there will be inventory risk. Inventory risk, and the bank will have to pay taxes as well. So it is very cumbersome, very, I presume, you know well that banks are not used to buy and sell like what we saw in the bazaar or in the supermarket. The bank simply take loan, take deposit, and make loan. So if the bank goes into this kind of a transaction, it will be very hazardous to them, right? Hazardous to them, right? So it would not be, possible for the bank to buy the asset from the vendor and sell to you on credit. What they will do is they do tawaruk, right? That if you use deposit fund, right? But now, because we have an investment account and we have the people who are coming, so you're putting your money in the investment account as an investor, right? So the bank is not a place for you to put your money in safe haven now. The bank is also a place for you to do investment. So now the commercial bank becomes partly an investment bank. Let's say in private equity, yes, the private equity, PE, which is basically run by investment bank, right? And then that would be a different function altogether compared to the deposit taking bank, right? So the bank will have to think how to basically mobilize the investment account fund, because the investment account fund, as you know, is a fund that you will use to buy the equipment, right? And then because it is an investment fund, the bank will not be the person or the entity that would take the risk, right? Because the risk will be carried by whom? Will be carried by the investment account holder, right? So the fund would be absorbing the risk. If the bank uses a deposit fund to purchase the machinery, the bank will have to hold the risk, the credit risk. Yeah, because the fund that the bank is using does not carry any risk. You place your money in the fixed deposit fund, in the Tawaruk fund, Tawaruk deposit, and you don't face any risk at all, right? So the risk is to the bank. So the bank will carry the risk, and by way of holding capital, right? So but bank would not want to do it because if you have 1,000 asset to do, there will be 1,000, different capital that the bank have to put against all those positions, right? So that's why you'll see that, for almost 35 years of Islamic banking in Malaysia, no bank is doing this kind of murabah, the NPO. No bank is doing it because of the capital requirement, the one that we discussed last week, yeah, capital requirement. But then if that equipment purchase is funded by IA, then there is a different ball game together, because the bank is coming here as an agent that will administer the purchases and will look for they will solicit for the SME who are in need of capital or machinery. So the bank as an agent, you can see here, some of the differences that you can just investment account versus deposit fund. So exposure funded by deposit fund are subject to credit capital charges. So this is again, I say, if your deposit fund is doing the loan must be backed by capital. And the deposit fund is covered by insurance. This is the Federal Insurance Corporation, FPIDM. So it is capital protected up to 250K RM. Project risk is covered. What is this deposit fund? Project risk is covered in Mudarabah deposit. Okay, project risk is carried by a bank and Mudarabah depositor, because the bank is so we have deposit fund, we got Mudarabah investment deposit. And remember when the theory that we saw earlier, that the bank have shareholder fund over here, and then we got deposit fund, and then we got the interbank money fund. So there is this bank that is also putting their money into the project, into the project. Same goes over here. So that is why project risks are carried by bank as well as Mudarabah depository. Revenue mainly comes from operating profit margin, whatever it is. But the main idea here is, if that particular asset is funded by investment fund, IA, then the exposure X, there is no capital requirement, right? So it is not subjected to capital requirement. So when the bank uses, when the bank is financing a certain project using IA, they will not be worried about getting money to put against the exposure. No capital put against the asset funded by IA. No PDM coverage, right? So bank will not spend money, to pay for the premium for the placement. Project risk carried by IA. Revenues from the bank are based on fee, because the bank can either be running the show as a wakil or as a mudarik. So this is you can just go back and take a look. What to look for in IA, the returns, so meaning that so if we have an investment account fund, so you are the prospective investor, right? So you're going to solicit some funds from you. So you, as the prospective investor, what will you be looking for at the fund? Of course, return, right? So what is your risk appetite? as an investor. You're not a pensioner, you're not an old man, you are basically in your 30s, and you are maybe you might be head of department or manager or you're a director. So you are basically in the top 20, your T20 group. So you have lots of savings. So you know where you don't know where to put the money. Put it in the stock market, you're a bit scared, right? Put it in the Bitcoin, maybe it's too speculative. Put it in property, you need a lot of lumpy items. Property, you have to spend 1 million ringgit per property. But maybe put it in unit trust or put it in IE. But what types of project that you like to invest in? Is it a social project? Is it a venture capital project? Is it a project that is coming from government contract? Yeah. Is it a project that is coming from a contract that's a Tesco? Tesco give you a contract to supply watermelons, for example. And then watermelons, and you need land and you need equipment to basically produce those fruits, right? And then because you have a contract already with Tesco or with Carrefour to supply, for 5 years or for 2 years. So that is that kind of contract or project that you are looking for. Yeah, so the nature of project, what are the risks associated with it, and how is the governance of the fund, is there a trustee or who is monitoring the fund, right? And then what about the bank that is running this IE? What bank? Is it Afin Bank? Is it Alliance Bank? Or is it RSB? Is it Maybank? Well, Maybank maybe Maybank have very good rating, so maybe you are more confident placing your money with Maybank investment account. So these are some of the things that. But again, the investment account fund is a long way to go. Many people are still not in the know what it is, right? And I presume that if the marketing side is really very tough, right? Because people, when they look at bank, it is a place for you to protect your money. They are not to burn your money. Burning your money, that would be the stock market, right? And I mean, if you're going to get your finger burned, then the stock market is the place where you can do that, but not with the bank. The bank is protection. So to have this kind of mindset that you can invest your money in banking, like make investment in the capital market, right? In trust and venture capital, private equity and that kind of thing. So this is a challenge that Islamic Bank is facing now, and okay. Again, this is a bank can run the IA as a wakil or as a mudarib. Yeah. So as a wakil, you see that the bank will not be, so meaning that it's a fee based, and mudarib is based on PLS. Yeah. Meaning that fee based, you can get your fee upfront, or basically how much you'll be getting. But if the bank is running as a mudarib, then the outcome of your mudarib function depends on the performance of the project. Yeah, so you can just look at it. And then these are some of the PDS for Maybank, and just take a look at it. And again, they're using PSR, but there's one again as a fund, the central bank require some kind of asset management rule to be observed, because not all of the fund will be put into the mandate, right? Some fund will have to be put into asset that can facilitate liquidity liquidity management. So maybe 5% is put in cash, and then 15% in sukuk. Then the rest will be invested in that particular mandate that was given to the fund. But if it is for SME, SME. If it is for venture capital, it's venture capital. So that depends on the mandate. But you can just take a look at all this. There's not much time. You can see that the IAP, this is finally like before finish. So this is basically some of the projects that we can look at, funded by IE. So we have about we got about 1, 2, 3, 4, 5, 6, yeah. Then 7, 8, 9, 10, 11, 12 projects, yeah. So this is the project that was listed in the IAP, investment account platform, right? So this is basically like a crowdfunding platform. So the bank can list the project, in the IAP, so that you can go into the website of IAP and you can see the project that is currently running and how much money is needed to be raised.
The CMC group is my company. I mean, where I work, Prof.
CMC. Oh,
Yeah. We want that.
CMC, what is infrastructure?
Public transportation.
Okay. So you can
we raise for our project in Ho Chi Minh.
Oh, so Ho Chi Minh.
Yeah, MRT there.
I see. So here, how much is they didn't put the number here. Oh, 12 million, 12 million funding. This is the fund that were raised for the CMC group, and the bank is Bank Islam. Project financing, yes. So the yield was 6.3%. So that was and for 1.5 years. Rating, meaning that the RAM, look into the business plan and look at the various, document, asset, and track record of CMC, and they rated it at triple A. Yeah, is it? Triple A. Wow.
Yes. We won the IFN Best Deal of the Year.
Okay, good. But they were using Tawaruk contract, right? So the fund, the fund is being used to finance this project through a sale or through whatever it is, Tawaruk. And IA is wakalah, so the bank is a wakil, and not using a mudarabah alternate, right? So that was 6.3%. You see, so that was basically indicative return, but that was the return that they got to give the IA holder 6.30, which is very good. This is tabung haji return, before the crisis, quite high. You can see also that in this is the Bank Muamalat Arahan, the rate go up as much as 7.5%, right? And this is a Musharaka, and CMC is the Tawaruk. ICT, last time we had IAP people coming to INCEIF. Anybody of you were around? So they were talking about one of the project, which is ICT, right? And the return is 6%, 3.9 million. So they are very quite small, loans, that sometimes bank may not want to entertain. 6 million, 6 million, this would be like, how much does it cost the bank to make assessment of your business plan and cash flow? Costs a lot of money, right?
Prof, for the CMC, we raised 12 million, but we bid other deal worth 1 billion because of the inclusivity and technology. Yeah, so just to add.
So the total amount that you are looking for is 1 billion.
No, we raised 12 million, but we bid others who reached 1 billion
Okay,
because
there's
we won the deal of the year at that time.
oh okay. So meaning that other the 900 and what? And the 900 and the 98 million you raised using 1 billion is 100 million.
But yeah, but
12 million
we
is coming from 12 million is coming from
12
IEP.
million, yeah, 12 million.
Right. So we have 900 and nine what? Nine eight eight is it eight
988.
99? What is it? Eight nine 998 998. So you raise 998 using what instrument, sister? You go public? You go what, through bonds?
No, we have facilities with other banks,
So
financing.
so like a syndicate, syndicate financing. So many banks contributed. Yeah. Okay. That would be CMC. Yeah. So you can see that this investment account is doing okay. 7%, 7%, 6%, 7%. And higher than the FD, which is currently giving you around less than 3. FD is giving less than 3. We got most of the financing contract. We got Taurus 1, 2, 3, 4, 5, 6 are coming from Taurus, and then we got 1, 2, 3, 4 Musyarakah. Yeah. So we got 6 from Taurus, 4 projects funded by Musyarakah, and then the rest is various. So 1, 2, 3, 4, 5, 6 Musyarakah, 1, 2, 3, 4. Yes, and then others lah. And then we got so 2 is basically others. We have, of course, I have not heard about any of the project, turning into losses, because I presume that this is thoroughly being monitored and what we see here, and these are short term, medium term, right? The maximum is 5 years, maximum 5 years, and then as short as 6 months, right? 6 months or 1 year. So this is the future of IAP, future of the investment account. You see, the investment account, it can be run by the bank alone. So meaning that we have 17 banks in Malaysia. Only 6 banks are basically the member of IAP, right? So IAP, the investment account platform, is a company which is funded by Bank Negara, right? And their job is basically to list the investment account project, right? So banks would be soliciting this project, and if they got a project which is viable, the bank can keep it for themselves. So meaning that the bank can issue an investment account, and basically do it on their own, right? But if the bank want to list it through the IAP, then that project will go public, right? So as a prospective investor in the IAP, I will know basically about your project, about CMC. I will know who are the directors. I will know your cash flow. So CMC will be disclosing your financial statement and your business plan pertaining to that particular project, right? So there will be public exposure to your company. Whether this is good or not, that depends. Yeah, I heard that many of the company that participated in the IAP, they like to be exposed, to get their project exposed to the public. This is like an advertisement free advertisement by the IEP. Some of them are a bit conscious. They will not want to do it. They will go to do it within the bank itself without going to IEP. Right? IEP is public, but the IA can also be in-house, meaning that your project will only be made known to the bank, to one bank alone, not to the IEP. Okay? The other one, if let's say you are planning to raise, the IEP is planning to raise 12 million, okay, 12 million. It is undersubscribed. Let's say only 10 million subscribed by the investor. There's 2 million which is not yet been subscribed. So under the IAP, the 5 banks that is participating, we call it the sponsor bank, they will inject money. They will buy the 2 million. You know, they will use their fund and they will basically invest in that particular fund with an additional 2 million. So that is the purpose. One of the purpose of the sponsoring bank is that they will inject whatever funds that is lacking. So this is a thesis by my student Tasnim Khalaf. So Tasnim Khalaf, she was in charge of the investment account for Afin Islamic Bank, right? So this is you know, like I mean, if you are there in the practice, then it will be much easier to have access to data. And however, if you're not, then maybe your only way to do your research paper is through secondary data. Yeah, you know, you can run the regression and run the econometric estimates. But if there is a possibility where you can get primary data and, you know, get into the field and meet with people, these are more, I presume, interesting study, right, down to earth, where you can, you know, learn on the ground how things are run. So this is one of the theses that I got from my student. Okay, I think that's it. The interbank money market, I will continue next week, inshallah. And you can get hold. I'll try to send this paper. We presented this paper in one of the conference. Maybe I can just send it to you for your reading, this IEP. And then any questions before we finish? So we have how many people? Yes, brother. Yes, brother Shakur.
Yeah, a question about
Brother Ali.
Brother Ali. Yes,
Ali.
Yes, brother Ali.
Ali.
Yes, brother Ali.
Mahmoud.
Yes.
Yeah, Professor, a question about assignments.
Simon.
Are they all due the same time?
Yes, yeah, at the same time. I think your voice is fine.
Yeah.
The assignment is due at the same time. Yes. Okay. So we got about 12 of us here. Shakur, Sister Yaya, Brother Ali, Brother Nisa. Thank you for being around, Fatrul, Azhar, Khalil, Sister Sakina, Ahmad, Koba. And so I hope to see you again next week. Thursday is a holiday, eh? Thursday is public holiday. What is the occasion? This Thursday.
No idea.
It's from Mi'raj, but I don't think Selangor, I'm not sure about INCEIF. I don't think Selangor is public holiday.
Allah. So we just that hopefully, you know, as we go on that the COVID-19 campaign, and then we can get to normal life. Any question, anything, please let me know through the LMS or through our apps. I will surely, inshallah, try to answer your query. Yeah. Okay. Thank you very much.
Thank you, Prof.
Thank you,
Jazakallah
Prof.
khairan.
Thank you, sir. See you. Good night.
Good night. Yeah.
Waalaikumsalam.